Good morning, it's Harvey Jackson. Just going to get through some news items. The wheat is still persisting dry and potential cold in the next few days or towards the weekend for the uh, mid-U.S., Kansas, Nebraska area, and that could affect some wheat. So we'll just get into it here. Wheat rally extends to Tuesday, so the complex is just posted some gains yesterday. It's just starting off a little bit muted as we speak here. And we'll get into some of the weather maps in my weather section there. But sanctioned China tanker turns back to the Strait of Hormuz, so you can see that it turned around and it went back. Looks like it's going to go in there to potentially load, but we'll have to see. Trump says talks with Iran could resume soon as U.S. blockades Iranian ports. There's also, not just Pakistan's coming into the mix, but there's even Switzerland was talking about potential being able to hold some of the talks. So today, the oil is, yesterday it fell, today it's going back up. So there's the whole seesaw effect or yo-yo effect on crude oil and everything here. But so the strait basically remains shut. There's been a few boats back and forth, but even less than there was before. Small business sentiment falls to 11-month low, and there's like the farmer sentiment has been low or extremely low as well. So it's just another piece in the U.S. economy that's actually failing here. So you can see that there is still absent moisture in the right where the Kansas City and area there that needs to grow or have some rains right in that area. But there is moisture elsewhere. It's extremely dry over here in Florida and north area here as well. So it looks like you could be getting some scattered rains there, but it's very scattered, and it's probably not fixing a whole part of the drought. So this is Saturday. You can see that you're in the 20s and 30s, and that could be expected, but it does drift even farther south. So where is the crop stage and will it get damaged is the next question. Quick look at the market here. Canola is up $5 at 709. On May, on July it's 722. November is 721.80. So the spread between those two have narrowed right up or basically erased. Rapeseed is basically flat at 500 euro. Soybean oil is up a half a penny at just shy of 67 cents a pound. Palm oil is basically flat as well. Crude oil up $1.28 at 92.56, and the Brent is at up $1.42 at 96.21, and your diesel fuel futures are up 8 cents at 3.55. Soybeans up 5.5 at 11.63. Wheat is actually spring wheat is up 3 cents on the December contract, and your other wheats are down 5 cents today. Milling wheat in Europe is basically unchanged at 95.50. Canadian dollar just slightly green, and your corn is up 3.5 cents. So you can see that the basically holding and maintaining the 61.8, and the 50-day moving average is actually adding support. So it's caught in this kind of a little bit of a wedge here going on between moving averages, but supported at the 61.8 retracement value as well. The November contract is well above there, using a value from back here. If you're using these values, it would be even higher, but quite a bit higher on the 50-day moving average. But still, your short-term moving average, your 10 and 20, is actually putting a lid on it from going up and trading as if 76.8 is your retracement value as maybe a value that it needs to trade through. Here's your European rapeseed. It's caught between those short-term and medium-term moving averages as well. Soybean oil futures tracking a bit sideways here. And soybeans have been basically sideways for a month. Palm oil, it's on its slide, so it's getting cheaper and cheaper relative to soybean oil. Your crude oil, big leg down, and we're slightly green here today, but still way above where we currently were before the war for sure. Diesel fuel futures still look like it's in this downward move, which would be great for us as well. Just looking at just your crude oil forward curve, you can basically just look at because there's normally an inversion in crude oil and it was pretty consistent for the last number of years, that there's a buck or two, but you can basically see that you, at the end of the year, you're basically erasing um, the the bigger inversion. So the inversion decreases basically towards the end of this year. So that's where the market is kind of pointing where the war is going to be over. Or not just the war over, but some of the problems with supply is going to be over by then. And that's not to say that it knows what Trump is going to do. Nobody does. I don't even think he does. So here's your gasoline futures. Still tracking sideways. It's not the same kind of move as the diesel fuel, where it looks like it might be been a little bit too high a price. Canadian dollar is still trading in that upward move from its low that it made uh, uh, beginning of last week. And the US dollar looks like it's on the move down. The S&P is trying to make an all-time high here, not far from it. So the U.S. economy is kind of shrugging off this whole war, and it's going to be fine as far as the stock market. But when you look at the bonds, it's not quite the same. Bonds seem to be have probably a little bit more accuracy on the overall health of the economy, because it's basically you're measuring debt. Um, Wheat, nice move up. We're trading well above the 61.8 retracement value, and above your short-term moving averages here as well. Just barely though. Here's your December contract. Have still, if guys wanted to put in some futures first contracts, it would be for the later fall delivery, not for the first part, because the grain companies tend not to give good basis levels at all. So you lock in futures at that $7 mark, and then lock in your basis later. Still, if growers need to move stuff, put in their targets, at that $8 plus kind of move right off the combine. Kansas, nice move up. We're actually not far from the bodies of those candles above there, and above the short-term moving averages as well. Same thing with Chicago. Chicago's actually got a bit of a lid on the short-term moving averages yet, so slower moving. Corn futures, a couple of days of recovery, but you're still caught below some of those moving averages, and even your 200-day. It's kind of trading right at that. And that's all I have for you.